Hi, this is Richard Flax from Moneyfarm with some comments about the current situation in financial markets. The environment has been challenging. Inflation remains stubbornly high. That's partly a function of supply chain problems and higher commodity prices. Rising food prices in particular are affecting consumers across Europe and the UK. The most recent inflation data in the US came out ahead of expectations at above 8%. The Bank of England now expects inflation in the UK to reach 11% in October. And in the Eurozone, the latest inflation figure was similarly high at 8.1% in May. Central banks are moving to tighten policy in response. We've just seen the US Federal Reserve raise rates by 75 basis points for the first time since 1994. The Bank of England has raised rates by 25 basis points at its latest meeting, and the ECB has announced a similar increase for July. All three central banks have promised more of the same in the coming months. That's raising concerns about slower growth in the global economy. In this context, we've seen prices for both bonds and equities fall. That's meant that bonds, often regarded as a safe haven in times of volatility, haven't provided as much comfort this time around. We had come into the year with what we thought was fairly low duration, a measure of bond risk, and that's helped us, at least in part. We're currently quite conservatively positioned in our portfolios. We've rebalanced a few times this year, in which we've reduced our equity exposure for most of the portfolio models. This, along with adding commodities and increasing our dollar exposure, has helped our portfolio performance. But we're still victims of the general market sell-off, even if this has helped limit some of the negative moves. So much for the history. What are our thoughts on the future? We recognize that this is a difficult period, and we think it's probably not over yet. Interest rates are likely to rise, and growth indicators will probably weaken in the coming months. But we're mindful that markets usually anticipate the future, at least to some extent. This long sell-off seems to suggest that a proportion of these risks are now priced in. However, we're continually assessing and monitoring the situations. As I mentioned, we think that the portfolios are fairly conservatively positioned. We see valuations both for bonds and equities that are better than they have been for a while, and that gives us some comfort about the prospect for long-term returns. We're looking for opportunities to add to our positions, and we think that we'll get those over the coming months. Having said all this, it's important to remember that markets operate in cycles. Sell-offs like this are not something new. The key is to stick to the long-term plan, make sure that your asset allocation fits your time horizon and your risk, and allow markets to go through their natural cycles. Thank you very much for joining, and hope to speak to you again soon.